Welcome to Javier. All right, welcome everybody. Thank you for joining us today for today's daily market forecast for Wednesday, May 17th. This webinar is brought to you by OctaFX, the award-winning Forex broker that's won multiple awards in the industry and brings you some of the tightest spreads in the Forex market. Without further ado, let's get started. First of all, a little housekeeping. A risk disclaimer. Trading foreign exchange on margin carries a high level of risk and may not be suitable for all investors. You should not invest money that you cannot afford to lose. Secondly, a hypothetical trading disclaimer. The information in this webinar is provided as general market commentary and does not constitute investment advice. In other words, the webinar is educational in nature and we're not giving specific trade recommendations. A little bit about myself, my trading history background. I was a clerk on the trading floor of the CME. I was a proprietary trader in the bond futures market. Proprietary trading firms basically back people to trade their own money and the traders take a split. That's how that works. I was a future and Forex broker for a while, so I've got some insight to both the trading and the broker side of the industry. And later on I founded a website called Traders Log, which is an educational website covering trading and investing. Let's talk about what we're going to cover in today's webinar. We're going to cover the top stories in the major currencies. We're going to cover key support and resistance levels. And we're also going to cover emerging chart patterns, stuff that we hope you're going to find educational that you're going to be able to use in your trading to orient yourselves towards success. And with that, let's jump into the US dollar, King Dollar, or the greenback. What I'm going to do, guys, today is I think it's important that you have a visual representation of what I'm talking about. So I'm going to try and bring up the charts of whatever currencies I'm talking about, just so you can have a more visual representation. So I'm going to shrink this screen. And we're talking about the dollar index. So we'll start out by bringing up the chart of the America's largest trading partner, which is the euro, and we'll just leave that up here. X out of here. All right, that's better. Okay. Right, some interesting stories in the US dollar emerging. We saw a lot of weakness in the US dollar across the board. It was pressured lower after the release of some disappointing housing data. there was some news that President Trump shared intelligence with Russia's foreign minister and the U.S. ambassador, and this also weighed on the greenback. There's rising fear among investors that Trump may not survive his first term and thereby be unable to deliver his tax reform plans, which is priced into the dollar right now. We talked about a 90% expectation that the Fed would hike interest rates in June. Investors are still expecting a roughly 73% chance of a June interest rate hike, despite some disappointing recent economic data. The scandal relating to Trump sharing intelligence didn't weigh on the stock market too much. There was fresh record highs posted in the S&P 500 and the NASDAQ also on Tuesday. Moving on to the next, the next major currency, we're going to talk about the euro. And here we got the EURUSD chart. GDP data released on Tuesday showed that the euro area economy grew by a steady 0.5%. So we saw steady growth in GDP in the euro area. We had the euro rallying above the key level of 110, reaching the highest levels since early November. And now we can go over and start looking at the chart. We're looking at the euro chart here. And let me just zoom in a little bit. So we can see that the euro is really on a tear yesterday. It broke through this major downtrend resistance level and had some nice continuation and follow through it here. Looking at the RSI indicator, which is a momentum oscillator, it's telling us that the euro may be about to go into overbought territory. The 70 level on RSI is an indicator that crossing over into the 70, over the 70 area is an indicator that the market may be overbought. But as of right now, we're very much in bull territory in the euro. You can see we're above the 200 period moving average. I'm going to expand the chart here so you guys can see it better. So we can see a few things here on the euro chart. This here is the 200 period moving average, which is kind of the line in the sand. It's more bullish sentiment above it, bearish sentiment below it. We can see that the euro found support at the 200 period simple moving average. We had a major downtrend line, 1, 2, 3 points here, broke through it yesterday, and we see some continuation there today. The other thing I did was draw Fibonacci levels on this major swing high to low here. Just pull up the pointer tool here. So this was all the way back in 2014 we're going back to, and we're looking at a retracement of this down move that we're seeing right now, and we're coming up to this 23.6 Fibonacci retracement level, which is at 111.96. So we might look for potential resistance at that level. Another thing about trend lines, we saw this trend line breakout here, and something to keep in mind is that a fundamental tenet of technical analysis is that if you had a strong resistance level, whether it's a moving average or a trend line, once it's broken through and price retraces to that level, that can serve as support, and vice versa. So a support level that's broken through and price retraces back up can become resistance. So what we might see is, if price retraces back here, market analysts might expect a bounce off of this trend line here, still coming into play. Okay, moving on. Let's talk about the British pound. Let's pull up the pound chart here. Okay, the stories for the British pound was actually the big story this week, with some serious economic data coming out amid a relatively quiet week for economic data. On Tuesday, we had the UK CPI report showing that inflation jumped more than expected to 2.7% in April, which is a 3-year high. The rise in inflation makes a BOE interest rate increase. It makes the interest rate hike more likely, which is something positive for the British pound, typically. We didn't see a big up move in the British pound yesterday, though. We saw last Thursday the news that the BOE held interest rates at their record low level of 0.25%, and we still got the pound below this key psych level of 130. We have some big releases coming out in the UK also. Later today, we've got UK unemployment and average earnings index, so look for more volatility in the British pound. We're going to pull up the pound chart here so we can see it large. So we can see here that we've got major level of horizontal resistance. I talked earlier in the week about a very bullish indicator, which is the golden cross, which is the crossover of the 50 period crossing above the 200 period simple moving average. So we saw that here. Here we've got an uptrend. And if I zoom out, we'll be able to get a kind of a better picture of what's going on in the pound here. So once again, this horizontal level is going to be very important, and a breakthrough of that, we may see follow through to the upside. And I would expect the next major level of resistance maybe to be about at this level. Just move this out of the way. So yeah, we got a nice top up here. We got a series of tops up here, 1, 2 there, and then close by they've got another top here. So let's draw another line there. So I would expect a zone of resistance up here at maybe 134.90. Moving on to the next major currency pair, let's talk about the Canadian dollar. This is one of the best charts of the day, the charts I'm most excited about showing. We saw the Canadian dollar, actually let me just pull the CAD up here so that you can see it alongside. Here it is. Okay, so Canadian dollar saw continued strength on Tuesday, reaching a 2-week high after Monday's news that Saudi Arabian and Russian energy ministers said that they back a 9-month extension to OPEC-led production cuts. Keep in mind, guys, that Russia is the world's largest oil producer and Saudi Arabia is the largest exporter of crude oil. So when you're trading these commodity currencies, I covered that yesterday, we talked about how certain currencies are tied to commodities, Canadian dollar being one, the Australian dollar being another, the New Zealand dollar being another. This is something you can keep in mind when you're trading these commodity currencies. If you have a big up move in oil, it may not be enough to simply buy those commodity currencies, but it may be a clue that you want to look for entry signals on the long side and that you're going to be more likely to be successful looking for long entries or basically buy signals. So with that news on oil being bullish for the Canadian dollar, it would be a good time to look for potential buy entries. We got a really interesting technical chart on the dollar CAD here. Pull it up. We've got a very well defined channel moving to the upside here. Keep in mind, guys, that it's the dollar against the CAD. So the dollar is the base currency and the Canadian dollar is the counter currency. When you see strength in the Canadian dollar, you're going to see the dollar CAD go down. So what we'd be looking for here on this daily chart is potential breakouts to the upside above here. I would expect follow through to the upside if it can break out here. And we've got really nice support to the downside here. Keep in mind when you're looking at trend lines, the more times the trend line has been touched, the more powerful the trend line is as support or resistance. So in the case of this downtrend line here, it's been touched 1, 2, 3, 4, 5 multiple times. So it's a really strong trend line to the downside. And so if we do see price breaking through here, I would expect substantial follow through. They call it a volatility breakout trade, and the reason for that is that what we can see within here is that the volatility is confined. So it's almost as if the pressure builds up more and more and more as long as it's confined in this area. The more times these levels are touched, and the more often that these levels are confirmed, and then when it finally breaks through, you can expect to potentially see a good move out of it. Let's get a sip of water. Okay, that's the end of the slideshow. Now let's go back to the charts. We talked about the euro. There's a breakout to the downside in the Swiss franc. Another one of the four major currencies. The four major currencies are the euro, the currency pairs, the euro against the dollar, pound against the dollar, dollar yen, and the Swiss franc. So I do like to talk about the Swiss franc, although it's not the most interesting pair to trade always, because it's not so volatile. But we had a breakout to the downside here. So we got two bearish candles here, and it looks like we got some follow through to the downside below this down trend line breakout. I pulled up some 4-hour charts because I know you guys are a lot of day traders out there. You like to day trade and have intraday trades. So if you're doing intraday trading, it's good to look at the hourly chart, the 4-hour chart. So in this pair, we saw a breakout to the upside here, and then a breakdown here. We've got RSI reaching oversold conditions. So if we see a break below the 30 level in RSI here, we can expect that this pair is entering oversold territory, and we might see a reversal in price. Gold chart, we've got an interesting pattern here on the 4-hour chart also. It's a flag pattern. We can see that we're in a downtrend line here. We have a nice channel going up here. So what we have is a downtrend. So naturally, being in a downtrend, we would favor a potential breakout to the downside. But since we got a fairly well-defined channel here, we're also looking for a breakout to the upside. You can see the RSI reached the 70 overbought area, but it hasn't entered into that area yet. Dollar yen was another chart that I pulled up yesterday. It's a good example of a trend line breakout to the upside with really nice continuation. I always say that dollar yen is an interesting pair to trade for day traders because there's a lot of volatility. It's one of the most volatile pairs. You see nice fluid price movements. So if you get into a trade and stay in it, well, if you get into a trade and you're on the right side, it's easier to stay in it as opposed to a currency that'd be more choppy that you might see in the euro or some of the other more choppy currencies. So nice breakout of this trend line to the upside. And again, what was former resistance will become support. So if we see price coming back down here, expect support at this trend line. Expect potential support at this trend line, I should say. So guys, we're coming up to the end of today's webinar. So I want to just pull something up quickly, which is the Auto Chartist platform, and just show you how I'm identifying some of these levels. It's a really useful tool and can save you a lot of time poring over the charts. You don't have to spend hours looking at the charts anymore. You can have them just scan them using the Auto Chartist MetaTrader plugin. So I'm going to pull that up, and we'll talk about how to use it. For me, I'm not a super short-term trader, so I don't really look at anything less than the hourly chart, but that's, it's a personal preference. So what I pulled up here, for example, we can look at the hourly chart, the 60-minute. Down here, we see all the chart patterns, and you can sort them by quality. So here we got a butterfly pattern in the Australian dollar, the pound against the Australian dollar, we got a channel down. New Zealand dollar versus the US dollar, we've got an ABCD pattern. So Auto Chartist brings up a lot of a lot of patterns related to trend lines, but you do also have head and shoulders patterns, Gartley patterns, ABCD patterns. So some of the more sophisticated patterns also, and perhaps in the later sessions we can break down and explain Gartley patterns, which are a little bit more complicated. In my view, it's very important to look at the end of day patterns, which is basically, this is looking at patterns on the daily chart, 1440 minutes, which is a day. So we can see today we've got, sort them by quality again. We've got a 3-drive, a Gartley, ABCD, a bunch of these different patterns to look at. So with that, guys, I'd like to wrap it up. I'd like to thank you all for joining us today. If you have any questions, please do email them. You can reach me. You can ask me a question on Twitter. I'm at Dan Blystone. And happy that you were able to join us today, and hope you'll come back tomorrow. Thanks very much, and see you soon.